is happening, or the NASDAQ 100, where are the key levels of support that people looking out to, where it would still just be a pullback within the kind of normal course of action?
Yeah, I mean, I would say down a couple hundred points below here is probably where you're looking at in terms of the NASDAQ 100. It's not a big move. It's back to where we were at points in March. It's also right around where that 200-day average would be for that index. So I think that's ballpark what we're looking at. Keep in mind, we did have one of these flushes, February into March, kind of a similar dynamic where, the Dow type stocks ignored the NASDAQ sell-off for a while until kind of couldn't ignore it anymore. So that's the zone I think that we're looking at now. When it comes to the S&P 500, it's just a few points, maybe 15 or 20 points in the S&P from its 50-day average. So there's all these areas where you would have stops along the way, obvious points for perhaps some from dip buyers and bargain hunters to come in. We're still within the longer-term trends. We're just kind of challenging them right now and having a pretty good little shakeout at the moment.
So, David, which data points should we watch from here? The data has been coming in pretty great on the broader economy, everything from housing to manufacturing, services, jobs was a little light. What are we looking at to determine whether this inflation story is a real potential worry for the Fed and will have to cut into their cycle and they'll have to start changing their tone and potentially raising rates?
Well, 1 or 2 months by readings like this, the Fed's going to be caught clear. But it's hard to say around going into any sustainable inflationary environment when you have a Q6 unemployment rate of 10.4% and an industry-wide capitalization rate at 7.4%. I mean, that's telling me that the output gap, even with all the stimulus, is still running around 1%. So I always take a top-down view of what's happening in terms of aggregate demand, aggregate supply. I don't feel that the pressures on the system are going to allow for sustainable inflation. My view on the economy, look, is the economy booming? Well, it's going to be booming with the amount of fiscal stimulus in the system. And even if people are spending 25% of the stimulus checks, like the New York Fed is saying, 25% of a big number.
We lost you, David. Got the point. You're not worried about the inflation story, given some of the dynamics and the slack there in the labor market. David Rosenberg, thank you for joining us on this important day. The Dow is down 620 points. We've got just about 15 minutes left in the trading day. We are taking you straight into the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli is here to break down these crucial moments of the trading day. And today we've got Ritholtz Wealth Management CEO Josh Brown here as well. We'll kick it off with the broader market. Major averages are plunging for the third straight day, with the selling exacerbated by that CPI data this morning, pointing to accelerating inflation, the most we've seen in years. Every sector in the S&P is lower. Energy has joined the sell-off. Consumer discretionary is getting hit the hardest, down 3%. Josh, what are you doing on a day like today?
Very little outside of communicating with clients, but I talked to my people today. Nobody seems to be particularly concerned. We don't have portfolios that are concentrated in the negative earnings jamboree. So, to us, it just looks like regular volatility, but with a really powerful story behind it. And Sarah, I found myself nodding along in agreement to everything that David Rosenberg said. And I don't normally agree with everything David Rosenberg says on this network, but I think he has it right, and I think he has it right for the right reasons. So my first reaction is, I'd like to see you run a factory, not you, but like anyone, run a factory coming out of a pandemic.
I'd like to see Sarah
and
run
accurately right.
I could run a factory.
I'd like to see anybody.
Just be different.
Guys, let's not lose the thread here. People are hanging on our every word. This is the market zone. I'd like to see anybody run a factory for the first time coming out of a pandemic and accurately be able to forecast exactly how many units of whatever might be needed. This is uncharted territory for people in the manufacturing side of the economy. So we'll put services inflation aside. We've had inflation in services for like 20 years, okay? That's the part of inflation we don't talk about. Everything from chips to autos to trucks to boats to lumber, all of that comes as a result of us just not knowing what the need will be 6 months in advance. Then we get vaccines announced in November. shots in arms in January. People just haven't needed a chance to catch up. So I would not say that this is the type of inflation that should lead you to make drastic changes in your asset allocation. But if you are looking for opportunities, I would be thinking about the types of companies that have pricing power, sustainable pricing power, because it is likely that we're not going to revisit the disinflation of 2020.
Pretty sure I
Real
got
estate,
4 positions
entertainment,
currently.
2 areas historically that have done a very good job raising prices in response to higher prices in the overall economy.
So
down about
I get all of that, Josh, but you're also a guy
currently.
that assesses momentum, assesses
Most,
the technicals.
I
When
assume
you look
most
at the
portfolios are down
areas that
today.
did so well last
But
year,
yeah,
and also saw quite a lot of inflows into as well. Do you look at some of those and the way they pull back and worry there's quite a lot of downside beneath them?
Strikes for May 28th. Both
I was
calls.
looking at the NASDAQ. That's a great question. Thanks, Wilf. I was looking at the NASDAQ before I came on the air. The NASDAQ over the last 1 year has now erased all of its outperformance relative to the Dow and the S&P.
Let me turn this guy down a little bit.
So that outperformance was something like
Real potential worry.
32 to 38 now. Probably gives up the rest of it. And you know,
the dollar is popping in after their close.
This is why people should not be investing in the
But there's some nice pressure on the GDX to the upside,
or the last
which was needed.
If you do that on a regular basis, you are de facto buying high, selling low. Most financial advisors, people who do what I do in the wealth management industry, have set the rules in opposition to that
just
issue.
straight
You
up
are
chop
buying low,
here.
selling high every time we're doing.
There's a drop that correlates with the SLV there off silver.
Most people who are managing money professionally as advisors are getting this moment right. And then a lot of people on the retail side who are momentum players without discipline, meaning they go long because something's going up, but they have no idea where to exit. That's, I think, where you're seeing a lot of the excess volatility coming from, and that's where it should come from. So if you
check the news here.
Insurance stocks, large cap banks, the types of things that momentum kids aren't in, it's another day at the
Refresh.
office. That's pretty much all.
Dow's
I'm
down
saying
1.8 currently.
Well, the Dow is having
Let me
its
hit the
worst
refresh
day
one more
since the
time
end
on
of
this.
January. The S&P having its worst day since February. Let's bring in Seema Modi with some of the names that are seeing especially big decline, Seema.
Oof.
Yeah, Sarah, I want to bring you guys some of the day's biggest losers.
S&P with the drop.
Declines in names like Wix.com and Lemonade. And then take a look at Virgin Galactic plunging another 11% today. Sonos, which reports after the bell, down about 10% ahead of its print. And then we've got 2 baskets of high interest underperformers today. Gig economy stocks.
Crude oil still doing decent.
30% from their
So I figured a bigger sell-off was in store.
DoorDash and Grubhub. Turning to electric vehicles.
My entry on the 2, or actually on 1 option contract. I was conservative, only got 1 option contract here after the end of that drop.
Guys, those are just a few of the names that are getting caught.
Oh, you can't even see. Let me bring that back over. Talking about, actually, I'll show you this one here. Talking about right in
Which is
here.
down about 9%. Caesars, Gap.
Had this buy-in, 2 sells on this drop here.
If you think this
You
is
see
a
those entries.
temporary story, this inflation
Exits
story,
there,
why not
entry
buy some
here.
of these stocks that are getting beat
Yesterday.
up hard today and have been for the last few weeks, especially some of the high flyers like Seema mentioned.
But I've still got profit in that, so I'm going to hold it. I got a feeling I'll end up selling out of that one tomorrow. Got to stop set here just to protect. GDX doing okay too into the close.
So where we need to add, we are adding. And of course, we're allocating new accounts around the clock. I think the issue here for investors trying to be tactical.
9 minutes to the close. 9 minutes.
Most of those are companies that aren't even in the major benchmark indices yet. Like they've come public in the last 6 to 12 months, either as IPOs or more likely as
Gold's got
SPACs.
this pressure it's working on busting through here.
So while some of them have large market caps, they really don't matter that much in terms of the
Silver
overall tape.
with the
Where they have
downside
an
pressure,
impact
so
is on
that, but you know, the 10-year.
And so I think there could be another leg lower because people.
That's what's
buying
giving the
these
Dow,
stocks
the S&P, and the
strictly on the
NASDAQ all the
basis
trouble
of
today is this
fact they had
10-year, but there's a
just
nice
gone
little
up.
drop.
Once that reward system is removed, like I buy a stock, it goes up 10%.
Oil.
I buy another stock, goes up 10%.
Doge.
Once you pull that reward system,
Little bit
out
of a
the
run there.
equation, people examine what they own and they say, "Wait a minute, I'm in Lemonade.
Got some
What the
ETH.
hell am I doing? What is this? I don't even know
Little
what this
Ether.
is." It's a ticker symbol.
old
I saw on
Bitcoin.
Robinhood trending it was going up. Now it's not. Sell. I don't
Bitcoin
think that
down
there's an
4.5%,
investor to take
Ether
that
down
seller's
about
place
3%,
until we get
Dogecoin down
much lower,
7.8,
given the
almost
valuations of some
8%
of those
today,
names. So
going into the
I don't really
close.
see as big
Of
a
course, the
tactical
crypto market
opportunity,
doesn't
as
close.
maybe others do. That's just my personal
Got my
opinion.
EDR play here,
Mike Santoli, would investors
which is a play on
welcome
the
some kind of
UFC.
rhetoric from the Fed that they
I'll
do
show you that
acknowledge
here. I'll
how
run a little
high
bit
this
bigger of a
inflation
chart.
print was, or would they rather see the Fed come out and say at some point in the next few weeks, don't worry,
Last
it's
buy-in
transitory, we're
was
not going to tighten anything
right
whatsoever.
around there.
Yeah, I
Because
don't
they
know
do that
what,
every day.
I don't know what
Bought
good
5
the
right there.
acknowledgement is,
I've got
aside from
40 grand
acknowledging the
total.
number itself, would necessarily
Been fairly
do.
consistent. I
It's
think
not
my
going
average
to
cost on that is like
inform ultimately a posture
26
on policy.
and
I
a
think it's
half
too early
approximately.
for them to really say that they're reassessing anything. They've told you for months.
I really didn't do a good job on risk management today. I should have got out of the SLV a little bit sooner. Held on to too many.
I mean, it's been previewed.
Really, I should have set a stop and got out earlier in the day.
I think it's the main thing that in a bigger picture way,
Because I don't like to hold on to more than 2 sets of plays for each position. So right now I've got 1 and 1 on
1
GDX.
month ago, mid-April,
See if they can show when I got it on that one. Yeah, so I'm down on this one for a little bit. Actually, might have a little bit of profit left in these. Yep, down 170 and down 570 on those. So I get back all the profit I had for the day. I should have, yes, yeah, I should have stopped out on these. Probably would have done it somewhere in here.
This is here. And so I think that, yes,
But that's okay. I'm holding on to them. I'm not going to buy anymore. We'll see how it does into the open tomorrow.
For what's happening, and it does, you know, at some
My long term over here, IRM, SIL, OKE, GOLD.
what we're dealing with right now.
Holding those for long. I'm actually going to hold EDR long term and still build positions between 30 and 27.50.
That the Fed could start doing right now is commenting on individual data
And
releases.
when I get a little more
Please
profit
do
in
not- please
Endeavor
restrain
Silver, I'll
yourselves.
sell. I've
Please
only got
don't do that.
$7.28
Ask
in
Dudley if
profit
he doesn't
there.
mind to stop penning op-eds.
But I've only got, what,
And
70 of
let's not
those, and
have the Fed
Sandstorm, I've got
react to
60 of those.
individual economic
No, excuse me.
reports. I think that's a huge
I've got 30 of those.
tactical mistake,
And I got
and probably the worst
$11 in profit on that,
They have
$11.40.
stuck by
So,
the transitory theme.
I want those to get a little bit higher.
Jim Bullard yesterday with us.
But I haven't seen the spike in the gold and silver market that I'm looking for.
This is transitory. We were expecting
And
this.
I probably should have expected a bit of a sell-off today, given that interest rates were going to go up. The 10-year was going to go up with the CPI data.
Off its recent high, so nearing that 10% correction level. Tom Lee from Fundstrat joins the conversation here on the CNBC Newsline. Tom, you've been bullish. How do you see the sell-off today? Do you see opportunities to buy?
Yeah, I think today's has the feel of a panic day, right? Because the VIX is spiking, so that's forcing de-risking. And today's
Nice pop here from the
panic
SLV.
day. I did talk to a few desks on the
I don't think my
bank,
sell will
and
get
they've been
filled,
saying
which
that
is
some of the
fine.
clients have had to raise cash, so they're
Again, I should have
selling
got out of
today.
it.
And as
Probably
you know,
on this
there's a
run
lot of
here.
people
No,
that
this
need
run
to
here,
get
more
on
than likely.
technology, because that's a crowded long, and a day without natural buyers means you get this sort of big downdraft. So, you know, is this scary? Absolutely scary. But
Everything's still got profit. It's just a down day. Let's see where I'm at here. If I broke 4%,
buyer today. I know it sounds very
I
strange.
did 4.08%.
Soaring again 30% today after a 40% move after 2 days. That's not what happens when the markets peak. That usually happens at the end of a sell-off.
Would you tell people to buy the NASDAQ as well? Recently you were
see.
saying there was a bit more downside there.
What's this guy talking about?
The NASDAQ, and let's say I use the triple Q as a proxy. You know, last week we downgraded tech to neutral, but we basically went underweight FANG. On the triple Qs, I think that it needs to touch the 200-day moving average, which means
Sup, Lokes?
300 on the triple Qs, which is about another 5%. From here. So I think that there's still some wood to chop on the tech and the crowded longs there. But, on the commodity-related trades, I think these are just the earliest days. And by the way, I know people are saying today's
Stock slide amid rising inflation concerns.
What still makes me scratch my head is the 10-year.
Look at that, Dow down 2%. I imagine most people's portfolios are a little worse shape than mine.
short-term trades can be hard to call, but you think the
GDX here, SLV here, USO here. If you guys have any requests for any stocks you want to have a look at, definitely okay with that. As soon as the bell rings, I got to go pick my kid up from the bus stop, but I'll be right back after that. Yeah, from the Walker line. Love you too, buddy.
Wilfred, that's a great question because look, at the end of the day, if tech's coming down and
let's put the 10-year back up on this chart here.
Other things have to go up for the market to sort of stay unscathed, and so I kind of agree with you there.
Oh, come on in, Luca.
Let's say that this is a regime change.
I guess he walked here a little early.
People are trying to get out of tech, and the natural buyers have disappeared because no one's buying that.
What up, buddy? You beat the market.
I'm already here.
We're streaming the market close here. Yo.
Felt like 10 seconds getting home.
It didn't take you very long at all. Give me a hug.
What time is it?
We got 2 minutes to the minute and 30 seconds for the market close.
Okay.
How was your day at school?
Good.
Nice. Look at this. We got a little bit of action here on the GDX, Luca. Some nice green candles here going into the close. SLV selling off into the close. Dollar. This is some dollar drop action right here. Bottom left hand of the screen. The DXY. It is bad, which is affecting my gold and silver prices though in a good way. Oil got a little pop going into the close here. Very nice, very nice. 50 seconds.
Hey Dan, is your gold and silver better than the dollar?
100% playa.
So then you probably want the dollar to go down more so your silver and gold can get better.
My man. I mean, ideally I'd like the dollar to go up, but the politicians aren't going to let that happen. They're not going to do that. They're going to keep it going down. So if I can't beat them, I'll join them.
So we did
So
actually have a run up
if your
in
gold
the
and
VIX
silver is
430
better,
in the early part of this year, even a little bit above that 35
just,
in the whole
you
GameStop
want
drama.
that to go
Here we are,
down,
sort of
so
late
Foe to the show.
you can earn more money by
so it still shows you a
gold
little
and
rattled, a little
silver.
unsettled.
That's right, buddy.
Were you trying to
and you get a
make
spike
that
on
go
the
down?
that is a little more of an all clear
There we go.
particular level on the way up, guys.
If you try to make that go
We've got
down,
30
you'll
seconds
make
left of the session. Very few places to hide today. Energy
Let's see where we
holding on to
ended.
a fractional gain. Otherwise, the other 10 sectors lower and sharply lower. Materials, tech, consumer
Here's something.
discretionary, communication services, utilities, industrials, all down
Very
more than
pretty.
2%. The S&P 500 itself down 2.1%.
Inside of it.
As the bell begins to ring, the Dow is down just shy of 2%.
So gold didn't even lose a percent. Oil was up. There we go. That's nice. Not a bad close, really.
2.7% or 357 points. Its low is down 370, so very close to it at the close.
if I had a bad Wednesday, I would say I had a wacky Wednesday.
All right, so I ended the day down 4%, which is not. But I mean, everybody else lost big time. Dow's down 1.92%. S&P lost 2.15. Nasdaq lost 2.67. What is that? So that's 4, 5, 6.
That's pretty bad. Oh,
Over 6% between the three major indices. And gold is doing good with only 0.94% loss.
your Bitcoin lost like 4%.
I don't have any Bitcoin, buddy. I've got Ethereum and I've got some of the dog e-coin. Mm-hmm.
Which one of your
Or just about flat. Consumer discretionary tech and materials were the hardest hit. The Nasdaq down 2.7%
IRM,
at the close.
long-term play.
A little more than 8% off record highs.
Next
The
is
Russell
this one.
2000 index of small caps
And then these
also
guys over here.
down more than 3%.
And these over here.
on the day.
These were some bigger losers today though, because that was a bad day for the SIL and the GOLD, Barrick Gold.
I like that the dollar is going down so the silver and gold can go up.
I agree. Yeah, it's already given them a nice push into the post market here into the close. which is good.
Where's the gold?
I'll show you gold right here. Gold here. Let me zoom out a little bit. Put this on a put it on a 30-minute chart there. So here's where we're at. Yeah, I know, buddy.
I'll send it to you with the context point, which I know you always make.
And the silver's doing like the same.
Yep.
And I saw that the silver made an M over there.
An M, yeah.
Had priced in this peak acceleration in the economy, had pretty poor
Alright, so, okay, we're gonna go ahead and end the stream here. I'll get my boys some food, and see somebody watching there, go ahead and click the old sub button. I'd appreciate that. Thanks for stopping by. Peace.
Hello.